The U.S. remains the best place to invest. Dateline, December 5th, 2019. Market Watch by a guy named, who wrote this? Howard Gold. Not familiar with old Howard Gold, but we're going to talk about this. I like this whole thing except for these people. I cannot stand that lady right there. She just... you want to talk about white privilege? There you go. That's white privilege, whatever that lady's name is. All right. Anyway, so let's talk about this. Amid all global stock markets, the U.S. offers the best long-term prospects. Here, brother man, here. I don't own any foreign stocks other than whatever the ETFs own are foreign trade and whatnot. Everything I have is U.S. Look, I'm a U.S. patriot. There's all there is to it. I'm a U.S. I'm a U.S. nationalist, without question. I love America. America's the best, and because of that, I like to read stories like this. Now, let's keep going down. Howard, who is old Howard? But you shouldn't be, what they call it, Zingonist or something, Zingoist? What do they call it? Like when you're not just a nationalist, but you're Zing, I don't even know what it's called. He invested Vanguard Total Market Index ETF. My kind of guy, man. All right, last year at this time, global markets were in a free fall. But in late December 2018, they turned around, and some indexes have recently hit all-time highs. Now, this is before the jobs report that came out today, and the market was up. Dow was up 337 points. S&P was up 28 points, which was, oh man, can I go back? Which was 1%, 0.9%. As of Monday's close, the S&P had gained 24.2% in 2019, where the NASDAQ was up 28.6%. That performance was topped only by highly speculative markets like Russia and Romania, which have gained 30% this year, though you could have booked a $4,200 gain by putting your chips on Venezuela at the beginning of 2019. And that's why I don't invest overseas, because of currency stuff. You just don't know. You don't know. I mean, you're up $4,200 because they devalued and the currency is crap there, but still, yeah, who knows when that's going to happen? That just is crazy. It's not because of fundamentals. This is where the economic theory just goes awry here. This isn't efficient market hypothesis. There is no efficient market theory here, whatever it's called, efficient market theory. I mean, is it efficient market at the beginning of the year or the end of the year when the market in Venezuela is up $4,200, 4,200%, simply because the decline of the value of their, was it Bolivar, whatever, Simone Bolivar? So what was rational or rational market theory, efficient market? It's all kind of the same thing. What was it? Before then, or now it's rational, okay, but what's it tomorrow? And see, I'm saying it's always hindsight. What's rational now? Well, was it rational if I didn't invest in Venezuela back in the beginning of the year because it's a basket case? Of course that's rational. That's nuts. Yet another round of uncertainty about a trade deal between the U.S. and China prompted a sell-off on Tuesday. Stocks rose on Wednesday, again on, I can't remember if they did on Thursday, but they certainly did today. And while share prices wax and wane based on news and rumors and tweets, the outperformance of U.S. stocks is no fluke. Although they may not be top dog again in 2020, they will still be a better long-term investment than equity alternatives overseas between overseas developed and emerging market stocks. You okay there, big man? All right. That's because no matter what our problems are, and they're amplified by 24/7 social media news, the fundamentals of the U.S. economy and the growth prospects of leading U.S. companies top those of our competitors. Could not agree more. I've been making this case for almost as long as I've been writing this column. He puts a link in here. Let's see what this guy says here. Let's see what this says. 2012. U.S. stocks are investors' best bets. All right. So was that when he started writing this column? I just want to scroll down here just to add and see. Howard, it doesn't say what he invested in back then. So, all right. 7 years, but okay, cool. He's been right. And during that time, U.S. stocks have smoked those of the rest of the world. From the post-financial crisis bear market low of March 2009 through Monday's close, the giant Vanguard Total Stock Index Fund, or ETF, has soared 481%. From March 2009, you're up almost 500%. Well, the EFA is up 194%, and the emerging markets ETF, EEM, is only up 153%. Those numbers account for stock splits and dividends. That outperformance reflects that the fact the U.S., where the crisis began, recovered the best of all these developed economies. Growth under Obama and Trump rarely exceeded the mythical 3%, but strong enough over time to drive unemployment below to 3.5%, a 50-year low. Again, like I just did a video earlier today, it's never been this good. It's never been this good on the employment side, ever. And well, at least in my lifetime, and I'm 49. Housing has recovered so well that at least half the homes are above where they were before the bubble burst. Consumers deleveraged big time, and U.S. banks recapitalized under tighter regulation that will prevent them from doing some of the stupid things that helped cause the crisis. Yeah, I don't believe that for 2 seconds flat, but be it as it may. Contrast that with the Japanese Nikkei, which despite an endless gusher of cheap money from the Bank of Japan, has never returned to its 1980s glory. Or Europe, whose big banks are still struggling and whose strongest economy, Germany, faces thousands of layoffs and the crown jewel of its industry, Volkswagen. Japan and some European countries have issued trillions of dollars of bonds with negative interest rates, showing how pessimistic investors are for those economies. Good boy. Yeah, you're not going to have negative interest rates if you think growth is going through the roof. You're just not, because if you have negative interest rates, you're guaranteeing yourself that you're going to lose money on the bonds, but you're going to lose money from an opportunity cost on not being invested. And don't get me started about emerging markets, the most overhyped sector of the past decade. They are filled with unpredictable, poorly run economies, and their indexes are increasingly dominated by China, a rigged, non-transparent market run by a brutal totalitarian regime. Yes, Michael Bloomberg, Xi Jinping is a dictator whose best growth may be behind it. So the rest of the world looks like a value stock that has no clear catalyst, except for China. It also lacks a powerful growth component of the U.S. tech sector. Of course, they steal from us. That's why Trump engaging in trade war. Well, he's engaging in trade war to protect our intellectual property. I was listening to Nick Gillespie interview Jonah Goldberg yesterday, and they're all bashing on Trump for this trade war. We're shooting ourselves in the foot. I was like, we have a private property right to this product, this IP, intellectual property. Not to see that, to say to allow China to continue to steal from us. I don't get how that's a conservative or libertarian approach. It boggles my mind. Private property dictates conservatism and libertarianism. Ownership, rule of law. To violate that because you hate Trump because he tweets too much or something like that is freaking insane. And Jonah Goldberg, man, what happened to that guy? It's the weirdest thing ever. I'm sitting there thinking, you don't like Trump. He's a buffoon. Okay. But you think this trade war from China is only been engaged now? It's a freaking, they were stealing from us. And investors have hardly celebrated the U.S. stock market triumphs. According to Morningstar Direct, institutions have allocated capital pretty evenly to domestic and international equities. But from January 2006 to the end of this year's third quarter, non-institutions, which include individual investors, pulled out about $620 billion from U.S. stocks and poured $820 into chronically underperforming international stocks. This is mass idiocy. There's no other word for it, and it has been a clear contrarian signal. New trade tensions may take stocks down a few pegs. The recent rally makes them ripe for a short-term correction. My guess is that Trump just doesn't have the guts or discipline to wage the kind of all-out trade war with China that could tank the economy. But once the pullback is over, receding recession fears and loose monetary policies, the Fed, the ECB, and the Bank of Japan should help stocks rally again in the new year and beyond. Investors who want to profit from that should keep the lion's share of their equity investments in the good old US of A and minimal amounts of developed emerging market stock. Yeah, it could, because U.S. stocks continue to be what they've been for the past decade. It's the only game in town. 100% agree with that. Let's see what kind of comments we got on here. There are so many things wrong in this article, it's hard to know where to start. How can you say the U.S. market isn't speculative when it dropped 20% in Q4 and then rebounded 24%? And well, I don't know if that's that's behavior. I mean, this guy's saying that's speculation. Oh, I mean, it's a short-term speculation, sure, but it's not long-term. That happens all the time. So you could say the U.S. stock market is always speculative if you want, I suppose. Long-term prospects, depending on the outcome next year's election. Smart Money bought just the close yesterday. Go look at volume if you don't believe me. Okay. Our investment environment is constructed so that Americans are forced to invest in this dumpster. Another, okay. Anyway, good stuff here. All right, so let's. That's good. I 100% agree with that. And again, as I said a million times a Sunday, my 3 holdings: VDIGX, VTV, and what's the other one? VBK. Just FYI. So I'm 100% American focused. There's a word for that. You invest in what you know. Country bias, I think it's native bias, I think is what they call it. And I have that, and I accept that. Absolutely, I accept that. That what's the word? I guess they call that a negative. I accept it. All right, we'll see you.